Welcome again, welcome back, good people. This is KASNEB CPA, that is KASNEB CPA May 2021 question 3, May 2021 question 3, and it's about partnership. So walk with me as we solve this question. Just a minute, let me do one thing here and then we will proceed. Okay. Okay, so May 2021, and it's a question on partnership. This is the question 3, May 2021, and what we'll be doing here is basically to find the solution to this question. And you can see the question is asking for the statement of profit or loss and appropriation account in a columnar form for the 2 periods ended 30 June 2020 and 31st December 2020. So they want the profit or loss and appropriation account for that year, but in 2 columnar forms, that is for the first half and the second half. Then the partner's current accounts and the statement of financial position. And this is 20 marks. Ideally, this question should take us 30 minutes. It's a lengthy question. So let's start. And we'll start by going through it. Andrew and Benta have been partners in a business sharing profits and losses in the ratio 2:1 after interest on capital is charged at the rate of 10% per annum. Their financial year ends on 31st December each year. Additional information. On 1st July 2020, Chris was admitted as a partner. From that date, Andrew, Benta, and Chris were to share profits and losses in the ratio 2:1, respectively, after charging interest on capital at 10% per annum. That explains why they want the accounting information in 2 columnar forms, because the first half of the year, there were 2 partners. The other half of the year, we had 3 partners. So for the purpose of admission of the new partner, the value of the goodwill of the business was valued at, was agreed at 9 million, but was to be written off immediately. On 1st July 2020, Chris paid 8.5 into the business. Chris is the new partner. It was agreed that 5 million be his fixed capital, and the balance be credited to his current account. No adjusting entries had been made yet to record his transaction into the partnership. The following to our balance was extracted from the books of the partnership as at 31st December 2020. So we have all that information. Yes. Yeah. Then sales during the second half of the year were 60% of the total sales. Okay, so that means the first half was 40%. This information will be quite relevant because we've been told to prepare 2 columnar books, that is. Then selling and distribution expenses were in proportion to the sales for each period. All other expenses were incurred evenly throughout the year. Depreciation is to be charged on cost per annum as follows. So motor, furniture, then drawings by the partners, then allowance for doubtful debts, first half and the second half. Leasehold premises was acquired on 1st January and is being amortized over a period of 25 years. Yeah. Inventory. This is closing inventory valued at 10.8 million. We are supposed to prepare the statement of profit or loss, partners' current accounts, and then a financial position. Okay, let's just jump into this and see how it goes. So we've been already told that we are going to prepare the books of accounts in columnar form. And we need this in for the 2 periods. So this is Andrew, Benta, and Chris. So we'll talk of ABC partnership. That heading is very important. So ABC partnership. That is the heading. And then we'll talk of financial statement. for the year ended, 31st, 31st Dec 2020. So that's how it goes. Then we underline. I hope my lines are good enough. So that is it. So that is the heading, and we always start with the heading. Then, because we've been told we're preparing it in columnar form, we'll have the particulars. Then they will have the first. Now this is quite tricky. We'll have to have for the first part particulars here. Then you have shillings. That is the first period. Then shillings again, and shillings. That is the second period, and then it's preferable that we have also the total. So this is we'll call it the first half. Then this is the second half. Then this is the total. So this is the trading account, and that's how we are going to watch it. Basically, we'll have the first part. So let's just underline this so that our work at least can look neat. So we underline this. I hope my lens will get better. There we go. Yep. So then we'll have just to see if we can get this one also well. That one. Then we have that. Then we have this. Sorry. And then of course we have the last column. There we go. So we have the first half, the second half, and then the total and the particulars. I think this is good. This will help us a great deal. So we'll, as usual, we start with the trading account, and the trading account is sales less cost of sales. So we'll go straight to sales, then less cost of sales. So what is our sales? Sales is already here. You can see sales is 80,000, and I think we were told normally it depends. Some people will prefer starting with the workings, others will prefer just going straight. But if you go straight to the question, the way I want to, the approach I'm using, make sure you have read all the additional information and you've understood they are in your head. Otherwise, you are likely to confuse. So, otherwise, you can also start with the workings, do all the workings, and then now just come and fill in the final books of accounts. I will go step by step as we work this out. So sales during the second half of the year, we've already been given the sales 80,000. So we'll also do away with the zeros. Do we need to restrict them? Yeah. We'll show, let's restrict them. It's very important that if you are restricting, you should indicate. So these zeros we are restricting. Second half also, let's restrict the zeros. And the totals also, let's restrict the zeros. Okay, so this is in millions. We've already made them in million. So sales is 80,000, and then sales during the second half of the year was 60%. So that automatically means that first half was 40%. So 40% of 80. So sales, the first half is 40%. Now I'll use the inner column for expenses, the outer column for basically for sales, credit and debit kind of stuff. So 40% of 80,000. 40% of 80,000 is, how much is that? 3.2. 80,000. So we are talking about 32,000. And then here it will be 60% of 80,000, which is 48,000. And then the total is 80,000. So that's how we are going to approach it. The 80,000 is straight from the question. If you read it, it's here. Sales 80,000. Sales during the second half of the year is 60%. So 60% of 80,000 is 48,000, and 40%, which is the remaining balance, is 32,000. So 32 first half, 48 second half, and total that. Then look if we have sales returns. Do we have sales returns? Check. We have sales, cash introduced by Chris. Do we have sales returns? Looks like we don't have sales returns. Check through. There's no sales returns. Since we don't have sales returns, we go straight to the cost of goods sold. So cost of goods sold. So cost of goods sold, we normally start with the opening stock. Then we add purchases, and then we less closing stock. But purchases might come in with some workings. So let's see. Opening stock normally is found in the TB, inventory 1st January, 9,600. But this is the opening stock for the entire period. So let's just treat it as the opening stock for the entire period as opposed to for the first half. Otherwise, if we treat it for the first half, it might also affect the second half. So since it's the opening stock for the entire period, we'll have it here, 9,600. Then let's add purchases. Do we have purchases? Purchases, 43,200. Now, they have not indicated anything on purchases. I've not read anything on purchases, and so I hope there's nothing on purchases. If there's nothing on purchases, they have just given us a whole figure on purchases. I think the only place they're talking about selling and distribution expenses, but these are not cost of sales. So since we don't have anything, they have not mentioned anything on purchases, let's just treat purchases as wholesome as it comes. So purchases, 43,200. Let's look around if we have any workings on purchases. Do we have any workings on purchases? That is carriage inward. Carriage inward is a working on purchases. We need to add if we have. So check around. And also return outwards. So do we have return outwards? Check around. Check. There is no return outwards. There is no carriage inward. So that means we are good to go. Then we less what? The closing stock. Closing stock. I saw the closing stock figure. And this is very important because we've not been given the closing stock at the end of the first half, the closing stock at the end of the second half. So just come here, closing stock, it's here. This is 31st December, so 10,800. That's why we are not going into this other direction of struggling with these first halves and second halves. So I'll just come here and say closing stock at the end of the year is 10,800. And normally for closing stock we less, so this will give us the figure that we find we'll have here. So that is 9,600 plus 43,200 minus 10,800. This gives us 42,000. So 42,000 like that. And then 80,000 minus 42,000, we have 38,000. So this one has to be in brackets, and this will come in as our gross profit. So this is our gross profit. Good. So we are done with the trading account part, and now we are ready to move to the profit and or loss account. And the first thing, profit and loss, we go to, do we have other incomes and gains? So check around if we have any other incomes and gains. Check around if we have incomes and gains. So that's what we are supposed to add. Incomes, other incomes and gains, rent receivable, accounts, rent receivable, commission receivable, discount received. Do you have any such like stuff? Check around. Check. I'm not seeing any. So since we don't have any, let's go straight to expenses. So come here again. Expenses, this is all about the partners. So expenses, these are, so we start here. This is where we have the first salaries. You can see salaries, but this salary includes partners drawings, so we'll have to check the partners drawings and deduct from that. And then we have rent and rates. Of course, it's an expense. Selling and distribution is an expense, which had some I think there was something. Selling and distribution expenses were in proportion to the sales for each period. So 40/60. All other expenses were incurred evenly throughout the year. So it means we will divide them by 2. Good. So we are moving. Then bank, this is an asset. Rent and rates is an expense. Selling and distribution, that's an expense. What else? Now we don't have so many expenses. Then depreciation. We've been told that all other expenses are evenly distributed. So let's go straight to the expenses, and we'll start with the salaries. Unfortunately, salaries has some drawings. We'll come here, expenses. So we have salaries, and salaries is how much? Salaries is 14,960, including partners drawings. So 14,960 salaries. Let's just do some simple workings here. 14,960 minus partners drawings. So where are these partners drawings? Drawings by the partners was follows. So these are the drawings by the partners. You have 2540 plus 2020 plus 660. If you add them, you'll get, let's add 2540 plus 2020 plus 660. So that is 5220. So we are going to less 14, that figure minus 5220. 5220. These are partners drawings. We've simply added. And what you are getting is 14,960 minus 14,960. We have 9740. So this is 9740. 9740. Now, salaries. What have we been told about salaries? Salaries, I think they are part of what is evenly distributed. So 9740 divided by 2, we have 4870. So it means here we'll have 4870, and here we'll also have 4870. Then the total is 2, that is 9740. Now, there is something here that we have we've left out, which is very important. There's something here we've left out, which is very important. If you have to continue with this journey the way we are proceeding, then it means we need to have gross profit also for the first half and for the second half. How do we get gross profit for the first half and the second half? We'll work with the assumption that we'll just go with the same assumption that we'll work with the assumption that that the cost of goods sold, because we were given the sales, remember? You see, we have the sales here. So it's the cost of goods sold that we chose to work together, just to work aggregately, the totals. And we got cost of goods sold as 42,000. So I think for us to get the gross profit for each of the first half, it's very important we divide this 42,000 and the two groups according to the ratio that we were given. So in our case, 42,000 times 0.6, because the second half was 60%. So we'll say the cost of goods, the cost of sales for the second half is 25,200. This is simply so let's have it here. Sorry, 25,200, like that. And this is 60% of this. Remember, the 60% of the sales were done in the second half. So we'll just take 60% of the cost of sales to be the cost incurred in the second half, and then 40% to be the cost incurred in the first half. So this first half will be 0.4 times 42,000. 42,000, which is the cost of sales. This is what we are talking about. So that will give us 16,800. So that we have 16,800 here as the cost of sales, and then the what we'll have here is 15,000. So minus 32,000. That will give us 15,200 as the gross profit for this first half, and then this one will give us 48,000 minus that think it will give us 22,800 as the gross profit for the second half. I think this is very important, so that when you get 15,2 plus 22,8, you will get 38,000, which is what we have here. So this is very important, and it gives us a room to continue working with the halves. That is very important. Okay, so let's proceed. We proceed. So we move to the second expense, and the second expense here that we have is this is salaries. We are done with that. We have rent and rates. Rent and rates, how much is it? 840, and we've been told that it's only selling and distribution expenses that are in proportion to the sales for each period. All other expenses throughout the year. So rent and rates 840, and we are going to distribute it evenly. So rent and rates, have rent and rates here. How much? 840. So that leaves it to 420, and also this side 420. Then here we'll have 840. Just list it like that. Then the next after now we have selling and distribution expenses 5240. So we'll come here, selling and distribution. We've been told that one is at the ratio of 40% and 60%. That is number 6. So 40-60, and selling and distribution is 5240. So what we'll do is 0.4 times 5240. That is 2096. But you have to check to make sure that there is nothing that affects selling and distribution. So that is 2096. So we'll have 2096 here, and then we'll do again 60%, 0.6 of 60% of 5240. 0.6 times 5240. That gives us 3144. So you come here and you show the 3144. 3144. This will give us 5240. Good. So we are on the right track. Make sure there's nothing that is affecting selling and distribution. I doubt. Yeah. So there's nothing. So we move on. What is the next expense? So from selling and distribution, capital accounts, current accounts, purchases, sales, cash, accumulated depreciation. I think the next thing now will be the depreciations. So let's go to the depreciations. Motor vehicle is 20%, furniture and fittings 10%. Depreciation is to be charged on cost per annum as follows. On cost, to be charged on cost. So go to the original cost and we charge 20% of motor vehicle, then 10% of furniture and fitting. So 20% of motor vehicle. Where is motor vehicle? Accumulated depreciation? No. We are interested in this on cost. The cost is 18,400. So 20% times 18,400. That gives us 3680. So depreciation for motor vehicle is 3680. That is 20% of the cost, not of the written down value. So we'll come here and say depreciation, and we start with motor vehicle. It's 20% of the cost. That is 20% of the figure that we have there, which is 18,400. We'll get 3,680. 3,680. But remember, this 3,680 is for the whole year. So for the first half, we'll have 1840, and the second half will also have 1840, because it's part of the expenses that were, it's actually a loss or expense that was part of the asset that was used up during that particular period. So we divide it by 2 evenly as per the instructions. Then furniture and fittings is 10%. So go back. Furniture and fittings, the cost is 5,600. 10% of 5,600 is 560. So furniture and fittings, 560. So 560 is here for the whole year. So the first half is 280, the second half is also 280. Good, we are moving on well. Let's see if there's any other expense that we've left out. Drawings by the partners, those are not expenses. Allowance for doubtful debts is apportioned as follows. Good, this one is a loss to the business and it has already been apportioned for us. So 1st January to 30 June, 129,000. So allowance for doubtful debts. And we didn't have this account, so we have just created it. So we don't have an increase or a decrease. If it was an increase, then we'll have debited. A decrease will have credited. But now it is we are creating it. So first half 129,000. And remember now this one, the zeros. Yeah, the figures look the zeros. We need to restrict these zeros. You can see they were restricting the zeros, and this one, the zeros have not been restricted. So we'll have to restrict. So the first half 129, the second half 80. Make sure, because that is now quite challenging, that is 129 and 80. The examiner is throwing something there to knock you off. So this is allowance for doubtful debts, 129 and 80. Make sure, check those zeros, they have not been restricted. You can see this one are restricted. That is a test, okay, on how keen you are. Do you have any other thing? The leasehold premises was acquired on 1st January 2020 and is being amortized over a period of 25 years. Yeah, this one, amortization premises, yeah. Part of the premise that has been used for that year, we have to calculate it. So the leasehold premises, where's this leasehold premises? Leasehold premises, it's a lease, so we have to include it. This is 12,000. So we'll simply say 12,000 divided by 25, because the leasehold was for 25 years. So 12,000 divided by 25, that is for 80 per year. 12,000 divided by 25. The amount is 12,000 for those 25 years. So to get the lease per year, you simply take 12,000 divided by 25. What do we get? This is what I'm talking about. 12,000 divided by 25. We'll get 480. This is a cost for the whole year. So if we are to talk of semi-annual, then amortization here, amortization will have 240 and then 240, which will give us 480, like that. So that is it. I don't see if there's any other thing. This is inventory, so we'll leave it at that. So let's get the totals. Now this time round we might work, we have to work the totals for all the columns, because at some point we had different figures, like allowance for doubtful debts. So we'll have to work out for both sides. 4870 plus 420 plus 2096 plus 1840 plus 280 plus 129 plus 240. That gives us 9875. We'll come here and say 9875, put in brackets, and then this is minus 15200. We already have our answer this side, 5325. 5325, that becomes our net profit. Net profit, the first half, sorry. Then we move to the second part. So that will also be 4870 plus 420 plus 3144 plus 1840 plus 280 plus 80 plus 240. This gives us 10,874. So we come here, 10,874, like that, because we are deducting. So then minus 22,800, we get 11,926. 11,926. So that becomes our net profit. Then we move to the last one, 9740 plus 840 plus 5240 plus 3680 plus 560 plus 209 plus 480. That gives us 2749. Or you can simply add this plus this, but since we are already done, 749, and then you get minus 38,000. That should give you 17,251. 17,251. This total should be the same. This plus this will give you that. So, having reached there, we move to the next. This is a profit and loss. So we go to the appropriation account. We go to the appropriation account. Okay. So the appropriation account. The appropriation account, for us to capture the appropriation account very well, we need to do some workings on, we need to have our capital account worked. So I think allow me to just come here and do a capital account schedule, because we will need some figures from the capital account, especially when you are calculating the interest on capital. So this capital account is very important at this stage. Let's just have our capital account. It will guide us. So how do we prepare a capital account? Capital account. Let's come up. There we go. Then there we go. Oh, my lines are not good at all. There we go. Trying out this one again. There we go. Then that is the credit side. So on the debit side, yes, that one has better. Yes. Then another line. There we go. Another line. There we go. Why am I putting 3 lines? Because we have 3 partners. It's A, B, and C. Yeah, good. At least we have gotten that one, right? So we'll call it capital account, and then we have partner A, partner B, partner C, partner A, partner B, partner C. This is particulars, and then for the debts, that one we are not so keen on the debts at this point. So particulars, yes. So let's do our capital account, and then that information will help us to fill the appropriation account. It's very important because some of the information will come from the appropriation account. So let's get the starting point for, I think this was the starting point. On 1st July, whatever, yeah. On 1st July, Chris was admitted as a partner and Rubenta our share profits. For the purpose of admission, the new partner goodwill. So let's come here. Normally there's a place capital accounts and Benta. Yeah, this is quite straightforward. So AB 6,000 and 5,400. And capital is a credit account. So we'll simply come here and say balance BD for A 6,000, for B 5,400, and C was not there. Then, but at some point we were told that C was admitted. Yeah, I think item number 3. On 1st July 2020, Chris paid 8,500 into the business. It was agreed that 5,000 be his fixed capital and the balance be credited to his current account. No adjusting entries have been made to record his admission into the partnership. So 5 million was his contribution to the capital account. So we'll simply come here and say additional capital, additional capital, additional capital. And the additional capital was from C, how much? 5,000, like that. Yeah, so we have captured that well. Then the other thing that affects the capital account will be the goodwill, and there was something about the goodwill here. For the purpose of admission of the new partner. For the purpose of admission of the new partner, the value of the goodwill of the business was agreed at 9 million, but was to be written off immediately. For the purpose of admission of the, goodwill is what has been acquired, what you are, the privileges that the other party is going to enjoy because of the struggles you had, the gains you had made before he came on board. So they agreed that the struggles they had made and the achievements all the achievements is valued at 9 million. So this 9 million, how are they going to share these two partners that were in existence before the new partner came on board? So for the purpose of admission of the new partner, the value of the goodwill of the business was agreed at 9 million, but was to be written off immediately. So we'll assume that this 9 million is going to be shared in their profit and loss sharing ratio. 100 Benta had been partners sharing profit in the ratio 2:1. So if it's 2:1 and it's 9 million, so it means that goodwill, because this is an addition to their wealth, the company, goodwill of 9 million, ratio 2:1, it means A will get 6,000 and B will get 3,000 and C nothing. This we have created, so they are going to share the gains in their profit loss sharing ratio. But again, something here, I think I've gotten it right, that they are going to write it off immediately, but was to be written off immediately. When we write this off immediately, it means we distribute it to all the three partners. We distribute it now to the three partners. It's the gain which we'll have captured already. So let's write it off immediately. And how do we write off goodwill? By simply debiting the same capital account. So we'll come here and say goodwill written off. Goodwill written off. How much is that? It was 9,000. At this time round, we're going to write it off, share among the three partners in their profit loss sharing ratio, new profit loss sharing ratio, which is here. From that date, Andrew, Benta, and Chris were to share profits and losses in the ratio 2:1, respectively, after charging interest. It's okay. So 2:1. So this is 5, 2/5, 2/5, and 1/5. So what is 2/5 of 9,000? I think it's 3,600. Work it out. 2/5 of 1,000 of 9,000 is 3,600. So this one 3,6, this one also 3,6, this 1/5. That is their profit loss sharing ratio of the 9,000. We are writing it off now, and it will be 1,800. Is there anything that we need to do on the capital account before we can proceed with the appropriation account? We are doing the capital account because those figures will be used in the appropriation account. So if there's nothing else, the capital account, we close it. That's how we close an account. And we take the side with the highest figure as our balancing figure. So 5,001, 8, definitely 5,000 is high. This side we have 8,4, this side is high. And this side we have 12,000, and 12,000, it's higher than the other side. So 12,000, like that. Yeah. So it means the balancing figure will be 12,000, 8,4, and 5,000. Those will be the balancing figures. So the difference, this is 3,200. The difference here is 8,4 minus 3,6. That is 4,8. I hope you've captured everything. 4,8. And then 12 minus 3,6. That will be 12,000 minus 3,6. That should give us 8,400. So 8,400. These are the figures, and this will be our balance carried down. 8,448 and 3,2. That is according to our capital. That will be our capital account according to what we have there. So then, let's continue the appropriation account. We continue. The struggle continues. It is a ruta continua. So let's continue. Let's extend these lines. So that we can have enough room to continue working our stuff. Yeah, good. So that is net profit. You have it there. Things are not bad. So appropriation account. In our appropriation account, we are going to start with the interest on capital. Interest on capital. So interest on capital. Interest on capital. Now, interest on capital. The first one is trying to get the capital account. So for the first half, we are not going to use the capital account that we've just prepared. For the first half, it was very clear these guys were only 2. So those are the figures that we're going to use. So first half, 6,000 and 5,400. And how much are they getting? It is 10%. So 10% of 6,000 is 600. And because it's only first half, we divide it by 2. So interest on capital, this will be, it's actually 10%. 10% of 6,000 times half. Half because we are dealing with the first half only. So this will give us 600 times half. This is 300. 300 for partner A. So interest on capital will have partner A here, 300, and then partner B will have how much? Was it 5,400? Partner B, 5,400. So it will be 10% is 540, and then half of it is 270. And then this is first half. So what will be the figures for the second half? The second half now, I think this is where now this now comes into play. At the end of the year, it was 48,032. So at the end of the year, we'll talk of 10% of 8,400, which is 840, times half, because we are only talking about the remaining, the last half of the year, which makes it 420. So this will be 420, and then for partner this one will be 10% is 480, half is 240. So here we have 240, and now we will also have partner C, because partner C came into play now. So partner C is 32. So 10% of 32 is 320 divided by 2. We have 160. So 160. That's why it was very important for us to come up with that book in the first place. So once we are done with that, we can choose to get the totals. The totals here is 570, like that. Get the totals. This is 400. This is 820, like that. And it's also true and correct if we have it like that. Then 510 and 160. Then you get this total. It will be 1390, like that in brackets. So that is okay. The next thing we are going to do is now is there anything maybe that needs salaries or something that needs to be captured in the appropriation account? If there's nothing, then we share the profits. So this is admission. That has nothing to do with that. There's nothing drawings, no. Okay, so we are done. So we calculate the profit. So we'll come here and say profit or loss. Profit or loss. So how do we compute profit or loss? This one now will have to come from downwards. So what do I mean by downwards? This is we'll start with the 17,251 minus 1390. That gives us 15,861. So 15,861. Then the other side, is 11,926 minus 820. This gives us 11,106. 11,106. And then you have 53.25 minus 570. That gives us 47.55. So 47.55. like that. So then, our interest is on the profit and loss sharing. So what profit will A get, what profit will B get, what profit will C get in this. These are the shares. For the first half, we have those ones. And for the first half, these guys were only 2. So, and they were sharing profit in the ratio of, is it 2 to 1? Yeah, I think the ratio was 2 to 1. So it will just be 2 over 3. A will get 2 over 3. 2 over 3 times 4755 and gives us that 170, call it that 170. So 3170. And then B will get, this is a 2 over 3. And then this one will get a third. That was the ratio 2 to 1. So a third of, this one will be 1 divided by 3 times 755. That gives us 1584.99, 1585 roughly. So 1585. And of course, this one was not part of the team. So that's how it ends. Then in the second half, we will have, in the second half, we had, who is this? Second half, we had partner C coming into play, and the ratio was now 2 to 2 to 1. So partner A will get 2 over 5 of the profit, partner B 2 over 5, and partner C 1 over 5. So what is 2 over 5? 2 divided by 5 times 11106. 11106. This is 4442.4. 4442.4. Then of course this one is also 4442.4. And because the other one is 1 over 5, it will be 2221.2. When you add this, you are supposed to get the same 11106. And so then what do we have here? It will be basically an addition of this and this. So plus 3170. What do we have? That is 7612.4. 7612.4. Then the second one will be 4442.4 plus 1585. This one gives us 6027.4. So 6027.4. And then lastly, we have this one 2221.2. If you add the 3, you should be able to get 15861. So that shows that the profit for the whole year was 15861, and it was distributed to the partners. In that, those are the figures that the partners will enjoy, the profit and loss. The profit, basically, it's not now loss, so we can even do away with this loss. Do away with this loss here. Do away with that loss. Sorry, do away with that loss. So I think we are faring on well. This is the first part, statement of P and L. 10 marks. You should have the 10 marks by completing that. So partner's current account. Let's just prepare partner's current account very fast. Time should be moving by now. This question normally is very good in an exam, but it consumes a lot of your time. So you need to be very keen when handling this kind of questions, because they can, yes, you will get it right, but it might consume a lot of your time. So you need to be very keen. And something that is worth mentioning here is that it is the transactions that are marked. So long as you have the transactions right, you move on. Don't be so keen on ensuring that that it must balance. Let me just click this. Good. So there we go. Oh yeah. Okay. Let's do another one. I hope this time these lines have not been so cooperative that it doesn't matter. So long as the message gets home. So long as the message gets where? Home. So there we go. There we go. There we go. Good. So let's call this partner's current account. Partner's current account. So we have here, this is partner A, B, and C. Partner A, B, and C. And of course, you need to show the shillings and restrict the zeros. Yeah. So particulars and particulars. Now, the starting point is quite straightforward. Balance brought down. Balance brought forward, sorry. Balance brought forward. This is balance brought forward is drawings by the partners. Now we start current accounts 100 Benta 3200 2440 3200 and 2440. So 3200 and 2440. Of course, C was not there, but later on we had additional capital by C. I guess it was 3,500. If I'm not wrong, let me just confirm. He introduced 8,500, 5,000 of which was fixed capital. Yeah, 855 was his fixed capital, and the balance credited to his current account. This is capital, so it has to be credited. So we are crediting, and that explains why we have this credit on the credit side. Then after that, what else? Where do we go next? This is quite maxing. Okay, where do we go next? We go to now anything, because the partner's current accounts captures anything that is that happens within that particular year. This recurrent kind of stuff, and interest on capital has just been earned. So we'll because this is their money, it's adding to their wealth in the business, we'll credit anything that adds to the wealth of the partners is credited. Anything that reduces their money in the account is debited. So interest on capital, and this money will just come from up here, from these, interest on capital. We have the figures here. So 720, 510, and 160. 720, 510, and 160, like that. So that is interest on capital. And we also have profit share. So profit share will also put profit share here. These are things that now affect the current account. Profit share, we'll pick them from up here from the appropriation account, 7612.4. So 7612.4. 7612.4, and then we have 6027.4, 6027.4, 6027.4. These points keep on disappearing. Don't worry about that. And then last we have 2221.2, 2221.2, like that. These points keep on disappearing. Okay. So then, what do you have this other side? I saw something like drawings. Drawings reduces their wealth in the business. So drawings, all the drawings will have to include them there. There was something drawings. Yeah, the drawings 25, 40, 2020, and 660. So I'll simply come here and say drawings. So drawings affects partners' current accounts, not capital accounts. So drawings. How much of those figures again? They have just disappeared. Oh. Drawings 25, 40, 2020, and 660. 25, 40, 2020, and 660. So 25, 40, 2020, and 660. Do you have anything else remaining? I doubt. I really doubt if there's anything else remaining. Check. Yeah, there's nothing remaining. So, since there's nothing remaining, we close the book. We close the books. That's how we close the books. Get the side with the highest figures. I bet it must be this side. You can see the figures. So 35 plus 160 plus 2221.2. That gives us 5881.2. So 5881.2. Then 2440 plus 510 plus 6027, 6027.1, and gives us 8977.1, 8977.1, and then the 200 plus those zeros that keep on disappearing, they should be forgiven. 7612.4, 11532, 11532 point, you see, it has already disappeared. 11532.4. Yes, this time it is not disappearing. So these are our figures: 11532.4, 11532.4, 11532.4, 8977.1, and 5881.2. So get the difference: 11532.4 minus 2540. This thing is quite time consuming. 8992, 8992.4, and then 8977.1 minus 2020. This gives you 6957.1, 6957.1, and lastly 5881.2 minus 660, and gives you 5221.2. 5221.2. Good. 5221.2. I hope those figures will be able to get them right when we are doing our balance sheet, because if we get them wrong, our balance sheet won't balance. Our balance sheet won't balance. So let's come back here. ABC, running with time. ABC, financial position. This is our balance sheet. Financial position for the year, not for the year, as at. Notice the difference. As at that first deck, 2020. I hope that was the year. Then underline. This is very important. And then we start to go straight to restrict, shillings. And then you can restrict the zeros as usual. We've been restricting them. Make sure if you restrict, you show. Then we start with the balance sheet. Balance sheet starts with the non-current assets. So we'll go straight into the non-current assets. Non-current assets. We go straight into the non-current assets, and we start. I think we had motor vehicle, furniture, 18400 and 56. 18400 and 56. That's what we are going to pick. That is the original cost. So we'll come here and say motor vehicle, and furniture. This is 18400, and this is the book value, and then 56. And then what do we have here? Accumulated depreciation, and then the net book value. Yeah, that's how it goes: accumulated depreciation, then the net book value. So what we are going to do is calculate. We have the accumulated depreciation somewhere. I saw it in the 12 balance, and then we add to the depreciation for that particular year. So accumulated depreciation, it was somewhere here. Yeah, motor vehicle, that's 680. So that's 680. That's 680 plus the depreciation for that year, all of that year, that is. There's no need to go back there. You just come back. You come here. Depreciation for motor vehicle, that's 680. Oh, so accumulated is that 680, and then depreciation is also that 680. That gives us 7360. So for the vehicle, we add accumulated depreciation for all those years plus the depreciation for that year, 7360. We get the total 7360 in brackets. So minus 18400, what we have is 11040. So 11040. The same treatment will be extended to the furniture account, and furniture accumulated depreciation is 10%. No, 10. Accumulated depreciation is 960, yeah, 960 plus, so 960 plus depreciation for that year 560. So it's 960 plus 560. This gives us 1520. So just come here and say 1520 is the accumulated depreciation. That is for the previous years plus this year 1520. So we are deducting 5600. That gives us 4080. 4080 as the net book value. Do we have any other asset? Doubt if we have any. I doubt if we have any. Any other? Leasehold premises. Leasehold premises. Leasehold premises. So this one was amortized. This one we did something called amortization. It's an asset. It's an non-current asset. So 12,000, and then we less the what has been used for that particular year, which was I think we had it here. Leasehold amortization. So what had been used is 480. This one is quite straightforward. So we'll just come here and say leasehold premises. Leasehold premises. This is 12,000. Then what had been used is 480. So balance is 11,520. Like that. 480 is what for that year. Remember, it was for 25 years, and so we divided 12,000 divided by 25 years to get 480 per year. And that year has already been utilized. So we proceed. We proceed. We are on the right track. We are on the right track. We are on the right track. So we are done. We are done. Let's get the total. It's only this side that is important. So this is 22 plus 4, that is 26. This will give us 20, 40, 640. 26, 640. That is the total for the non-current assets. Then we go straight to current assets. Current assets. Now, what current assets do we have? Let's go back to the question, pick them very fast. Let's go pick them. Current assets, we have inventory, closing inventory piece. Accounts receivable, 6440. So accounts receivable, oh, this thing is, have to move distance, kilometers. Accounts receivable, that is 6440. But there was some something on accounts receivables, 6440. I think there was something, the bad debts that were created. Bad debts created. The bad debts, provision for bad debts. How much was that? 129 plus 80, that is 209. So we have to factor that. So minus 209. Meanwhile, let's go with another bank. We have bank at 2460. Bank 2460. And inventory was 10,800. Yeah, let's go with all of them. Bank is 2460. So we have bank, which is 2460. Sorry, we'll put them here, 2460. Inventory, I've just crammed this, 10,800. And then the 6440 was minus 209, which was the provision for allowance for bad and doubtful debts. So 6440 minus 209, this gives you 6231. So 6231. Do you have any other current asset? I doubt. If we don't have any other, we add these ones, but we'll check again. Plus 2460 plus 10,800. So that gives you 19,491. 19,491. Let's just add them here. So this will give us, when we less the current liabilities, we get what we refer to as liabilities. We might want to less current liabilities here so as to get the working capital, and let's just do it all together. Then we get the net capital employed. Non-current asset plus current assets minus current liabilities, we get net capital employed, which will now be compared with the finance by section. So current liabilities. Current liabilities. Let's check current. And I'm also checking if we have any other current asset that was left. So current liability, we have accounts payable here. Accounts payable is cash introduced by place. Accounts payable is 8560. Good. 8560. Do you have any other thing? Drawings? No. 8560. So accounts payable 8560. We'll just take it direct so that we have net capital employed. Accounts payable is our current liability and it's 8560. So let's just list this together. But we can take current assets minus current liabilities, get working capital. Then working capital plus non-current assets, you get the net capital employed. In our case, let's just get the net capital employed straight once and for all. Net capital employed. So this will be 26,640 plus 6,640 minus 8560. This gives us 37,571. 37,571. Then we say financed by. Financed by. Now, financed by section will have the capital account. Capital account. And then we'll have the current account. So capital A, B, and C. And then current account A, B, and C. A, B, and C. So we just go back to the accounts. Capital account, this is the capital account. So 8448 and 32. 8448 and 32. So we say 8448 and 32. And the total is, this is 8,000, 16,400, 16,400. This is supposed to be closing balance, so they were closing. So this is 16,400, and then current account. Now fingers crossing, we keep our fingers crossed. 5881.2. Let's start with that one. 5881.2. 5881.2. But even if it doesn't balance, you don't have any. So long as you've done your transactions well, they will mark the transaction. So 8977.1, though it is always best if it balances. 8977.1, and then for A, it's 11,532. Not getting this figure right. 11,532. Oh, I'm picking wrong figures. Sorry. The figures we're supposed to be picking are these ones. 8992, 8992.4. These are the balancing figures. Sorry, I had not indicated. Balance carried down. These are the balancing figures. So 8992.4. 8992.4. So I'll delete this. 8992.4. We'll do away with this, do away with that. So I'm picking the right figures. The balance carried down, that's what I'm picking. 8992.4. Then 6957.1. 6957.1. 69. Sorry. 6957.1. And then lastly, and I hope it balances, 5221, 5221.2, 5221.2. So 5221.2. Good. So let's add 8992.4 plus 6957.1 plus 5221.2. That gives us 21,170.7. 21,170.7. Then we add the two. So 21,170.7 plus 16,400. This gives us 37,570.7. That's 7,570.7. Wow, it has balanced. That's 7,571. That's 7,570.70. So this one it's as good as saying 37,571. So yes, this has been a good journey and it has just balanced. 37,571. Good. So 37,571, 37,571. Thank you so much. So this is our net capital employed. And show that the balance sheet, the statement of financial position has balanced. Our net capital employed, 37,571, is the same as net capital employed, 37,571. So thank you, and let's meet in the next question. Ideally, this question should take you less than 30 minutes. Now you know you need to work on your speed. Bye.